Hey traders, Jeff coming back to you full throttle. Hope you're doing well. Wanted to take a few minutes today and just share with you about an IWM trade that we exited out of today in our traders members only traders room for $962 profit. I'm going to show you the breakdown of what that looked like. And again, the key lately has been about patience, being able to realize that this market is not up on a lot of volume in here. And you have to ask yourself, if you were a money manager for, umpteen billions of dollars, being this market is so overbought going into the new year, how much more do you want to commit? You and I can get in those stocks and get back out. But these larger companies, once they commit to that kind of money, they don't unroll those positions right away. It takes a little bit more, time to unwind that. So you're seeing this market up on light volume, and that's the key to know. Going into December, I think we'll continue to do that. The pullbacks will be healthy. We may kind of pull back and moderate, but ultimately, it's kind of unusual that we're this high up here and we're just kind of sitting here. And but I think it still is overall looks good. It's just that it's going to be lower range and a little bit more nimble profit taking. So let's take a look here over at the diagonal spread. Okay, so this is IWM. I'm going to show you the breakdown here momentarily. Now, this was a diagonal on the put side. What does that mean? Ultimately, it means that we are buying a put, but we're selling a put a little bit further, well, quite a bit out of the money. And that gives us kind of the bearish indication of a put that we bought, and it's a bullish event to basically sell puts below current price. So that gives us our diagonal, or you may want to look at that as protection. One of the reasons that diagonals work so well is because it's protection, number one, gives you an onslaught of things that you can do with that. Get rid of the short leg. You can just do a lot with it. You can roll the short leg out. You could even roll the short leg in. There's a lot you can do. But ultimately, when you do it correctly, you're rolling the short leg after a nice profitable move forward, and then you can actually have that positive long leg, if you're going long, in positive theta for you. You don't get there very often, right? But that short leg allows you to buy time and burns because we're going further in on a different strike, and obviously at a different strike at a different closer front expiration. It allows us time to roll that. Now, I'm not doing most of these where I'm going out 6 months. Most of these are around 45 days-ish, maybe could go to 50, 60 days. So get a chance to roll that many of them. But, we do have our share of the other ones we're going to be doing as well. Much longer in time and have 4 or 5 calls that we write against that over the duration of the spread. So take a look at the diagonal here, IWM 962.82 win. Got a half on Thursday. We've got the piece out today for 48 at 508. Again, great trade here. It did penalize us at first a little bit, and I'll share with you why. Before I get started, as always, just understand that trading options can result in substantial potential loss. This is no guarantee of profits at Full Throttle Traders. We just simply provide education for you. They do provide risk, and obviously it's not suitable for everyone. Same slide every day, but we want to make sure that people are aware of this. It's the first time you're seeing this. Past results do not equal future profits, so that goes without saying. Here's the trade on the IWM. Again, so we end up getting in here. What it was that we had the double top in here. This was the top. In here, you'll notice on the 65-minute chart that I'll show you momentarily, you could have found a good reason to get in here, maybe even here, but the issue is that when you see this double top up here, you have to think about where's the big money? Where do they have eyes on this? Well, they know that they can run this up to demand before they put on a pretty good fight, or up to supply rather, before they put on a pretty good fight. Well, it just so happens that run up happened to be in form of the gap up. This was the election gap in here, right? But outside of that run back up into supply and that gap up in 65-minute chart. So you could have got at the bottom, you would have missed that by a couple of days, but it actually worked out very nice. So look at this double top. Think about where big money is. They know the fight's going to be here. It's not going to be here. Not to say that it can't move down and things don't have to go perpendicular like this, but just know this. This is when you sit back, you're patient, you wait on the stock or wait on the trade to come to you, and then you snap when you need to snap at this stuff. Don't try to push that issue. If you have to, and you think, well, I'm missing in that way, maybe you're not reading the charts the same way. There's a lot of reasons, right? What makes someone else tick a little bit better, maybe with more experience versus someone with a little less experience. But you could always in your plan say, well, I'm going to nibble maybe a little bit. I'm going to go in for a third of my position maybe in here. If you're wrong, you're not going to be, sweating too much. You can average back in on the ad. So that's another way you can do it going forward. Just take a look at the 65-minute chart. I think it shows us more than anything else. You can see each one of these turnover bars here breached the previous 1 year. You could have made a case to go in here. You could have made a case to go in here. What made this better? Well, I have to go back to that slide. What made this better was because big money, that's not up on small volume. You got IWM, the Russell 2000, the small caps. They've been on a run here in the last, I'm going to say, month or so, 6 weeks, more than we've seen in quite some time. They typically always lag the sector, always lag the indices, but right now they're holding their own pretty well, at least up till this week, up through last week rather. So you can see, so if all those turning bars were here and here, you could have made a case that was a 35%, 38% retracement. You could have made a case that was a 50% retracement, and you could have nibbled in there, and you would not have been that bad off. You would have had to experience a gap in here, but this is where the bigger money would have got in. Right up into the exhaustion gap. Wait for the piercing bar on the hourly chart, right? You would have never shown red at this. Now, if you would have got in early on off the gap because maybe it was giving you some early rollovers on a 5 or 15, you could have got in here and experienced several days of that, I know. But right in here, you could, if you would have waited, that was where the big money exhausted itself, at least for the last 10, 12 days of trading or so, right? It's always better to get in these trades when you know that you're not taking a lot of pipe coming at the beginning of the trade. So that was the ideal place. That was the exhaustion gap. Again, that was the V-top into the supply area. Again, you didn't know this was going to happen at the time. This is the trajectory line on the trend line, extrapolated from the daily chart to here. You can see it could have went a little further in here, but you have to treat these gaps and these here, when they do these gap fill back in here and back, they want to fill this place here. They want to. And then you have to assume that they will. And then you're not going to get them all the time. But if you do wait for that and you're patient, you're going to do quite a bit better than trying to take the one that does pull back right away versus one that doesn't. You have to experience the gap against you before it actually makes the move south. This wasn't a huge move down, around about 245-ish, came down around 237 here late day. We took our last piece off around 238, 238.10 or something like that. Some changes today that made us a nice little chunk. Again, pulled out some nice coin on this at just under $1,000, or 962. We also got out of some more today. I'm just showing you one here. We got out of Boeing today for a nice $117.70 profit per contract. We've entered in the Netflix today on a 4-day DTE 0T going well. Took half off in 20 minutes. We have a lot of trades going at one time. I just try to pick one trade in here and just kind of highlight and break down the entry, maybe what the exit is, why these are. Right in here is where, this is the daily chart. Right in here, you could have been exiting the stock right in here. Now, the difference is when you're selling the put and you're buying a put is that because of the time decay, right, or the theta, you may not be at, even though the prices might be lower here, as opposed to here, it may be better to take it when it's higher because you don't have the theta that's kicked in yet, right? So sometimes these back in here are great, but if that had been priced up in here, that could still be the same price as down in here because as long as it's not too far against you, you're going to have more of that short leg burning to your favor, or at least offsetting the theta in the long leg. So I hope that makes sense, but this is kind of what we do each and every day. And Full Throttle Traders, once again, the 65 minutes was a beautiful entry in here. In here, take a little pipe came back in this area, and ultimately we got back in the groove on this. But this is the ideal entry right there. But it was up quite a bit. This right here, I wouldn't have been surprised. This would have been an entry, but it was just, the market just kept gapping and kept gapping and kept gapping. We have a couple of SPX plays on the 6310 by the 6410 doing very well. Should take profits in the next 2 to 3 days. We have some 615 by 630 on the SPY. All these are well in the profits, almost at full profit. So we've probably taken 2 today. We're sitting with about 3 or 4 on the backside that are all green, ready to take profits, and we nailed this one today for a nice little win. Once again, I appreciate you taking the time to join me here at Full Throttle Traders. If you have any questions or would like to Zoom call with me, no cost, just help you out. Maybe if just to understand this more, I can detail this, or maybe in some of your own trades. It doesn't matter. Hope to hear from you. Jeff at Full Throttle Traders. Thanks again. Till next time, keep it real.